The world's their business empire spread everywhere, but Abdulaziz's ambitions were much bigger than trading. He wanted to rule the world of finance and banking. He wanted to buy a major Saudi bank, but he didn't have that kind of money. This is where a dangerous game began, one that would eventually shock the entire world. In the 1980s, Abdulaziz started taking out huge loans from banks, but these loans weren't backed by real documents. They were based on fake and falsified financial statements. The banks believed they were lending to one of the richest and most trusted families in the Middle East, so no one ever felt the need to dig deeper into the paperwork. Around this time, another figure enters the story, Maan Al-Sanea. Born in Kuwait, Al-Sanea was sharp and calculating. He married into the Al-Ghosaibi family and through that marriage became part of their inner circle. He quickly built his own business empire under the name Saad Group. Impressed by his intelligence, the Al-Ghosaibi family put him in charge of their finance department, known internally as the Money Exchange. From 2000 to 2009, an enormous scheme was run through this division. Al-Sanea began borrowing billions of dollars from banks around the world, leaning heavily on the Al-Ghosaibi family name and reputation. He would borrow from one bank, then borrow even more from another just to repay the first, a cycle that kept growing, with almost no one aware of what was really happening. Over those years, roughly $330 billion moved through the accounts of the Money Exchange, a sum so large it dwarfed the financial systems of entire countries. Banks handed over money without asking hard questions, trusting the family name completely. With this borrowed fortune, Al-Sanea and the Al-Ghosaibi family lived a life of extraordinary luxury, private jets, expensive properties, and vast wealth scattered across the globe. By 2009, Forbes had listed Al-Sanea among the richest people in the world. For a while, everything seemed fine, and the fraud might have continued for years. But then the 2008 global financial crisis hit. Banks across America and Europe began collapsing, and a severe cash crunch spread worldwide. Panicked lenders started calling in their loans. That's when the entire structure built by AHAB and Saad Group, a structure resting entirely on borrowed money, began to crumble. When more than 100 banks demanded repayment at once, there was simply nothing left to give them. In May 2009, the Money Exchange officially stopped servicing its loans. This wasn't a minor default. The outstanding debt stood at $9.2 billion. The moment this news broke, shockwaves ran through the global finance sector. From Saudi Arabia to Bahrain, from London to New York, chaos erupted. In total, 118 international banks were caught up in the fraud, losing billions of dollars. As pressure to recover the money mounted, the Al-Ghosaibi family made a dramatic move. They blamed everything on their son-in-law, Maan Al-Sanea, claiming they had no knowledge of the fraud. AHAB filed major lawsuits against him in courts in New York and the Cayman Islands, alleging that he had forged their signatures on documents and used fraudulent paperwork to secure loans in their name, then funneled that money into Saad Group's companies. Persuaded by these arguments, a Cayman Islands court took a drastic step. It froze $9.2 billion of Al-Sanea's assets. Overnight, Saad Group's entire business collapsed, and its companies fell into disarray. The case was so complex that no ordinary investigator could untangle it. So the Cayman Islands court appointed a team of liquidators, Hugh Dickinson and Mark Byers of the firm Grant Thornton, to dig into what had really happened. Their task was daunting, reconstructing 10 years of financial records, many of which had been lost or destroyed as Saad Group collapsed, and many of which were tied to companies registered in the Cayman Islands. The liquidators realized the only way to uncover the truth was to trace the money through the banks that had transferred it. Their investigation revealed that in 2009, Al-Sanea had funneled millions of dollars into his Saudi accounts, using major banks to move the money. The key question became, did these banks know the transfers were fraudulent? When the liquidators requested records, many banks refused, hiding behind banking secrecy laws and national regulations. But the investigators didn't back down. They took their fight to courts in the United Kingdom and Switzerland, demanding that foreign banks hand over their records. After a long legal battle, the courts ruled decisively. Banking secrecy could not be used as a shield for fraud of this scale. The banks were forced to disclose their internal records and documents. Grant Thornton assembled a team of forensic accountants and lawyers from around the world to trace where the billions of borrowed dollars had actually gone. In Geneva, they uncovered a suspicious transfer of $70 million through a major bank and filed a case against it. In a landmark ruling, the court declared that banks would be compelled to disclose the full truth in this case, sending a wave of fear through financial institutions worldwide. As the liquidators pored over thousands of pages of records, what they found was staggering. This wasn't a simple case of theft. It was an intricately woven web of deception. The banks, it turned out, had done almost no due diligence before wiring the money. One major bank had approved Al-Sanea's unusual requests again and again without question. It became clear that the money wasn't the result of one man's scheme, but part of something far larger. While the liquidators worked to recover the funds, the hunt for the real culprits intensified. The Al-Ghosaibi family kept insisting they were innocent victims, claiming Al-Sanea had exploited their name to destroy them. But as the investigation deepened, a far more disturbing picture emerged. Al-Sanea hadn't acted alone. Documents the family claimed were forged turned out to have been approved by senior family members themselves. Internal emails and records told a very different story than the one the family had presented publicly, and slowly the family's carefully constructed image of innocence began to fall apart. When investigators finished combing through the evidence, the full picture was damning. The very family members who claimed to be innocent victims had in fact been deeply complicit. The documents showed the family was fully aware of the loans being taken out in their name. For years, as the borrowed money fueled their wealth and prestige, no one in the family raised a single objection. Only once the market crashed and the banks came calling did they turn around and blame Al-Sanea. Old emails and internal documents surfaced, undercutting the family's claims. Some of Al-Sanea's own records showed the money movements had been authorized by senior members of the family all along. The case dragged on for roughly a decade in the Cayman Islands courts, drawing attention from around the world and becoming one of the longest and most expensive legal battles in history. The volume of documents and evidence was so vast it took years just to review. In 2018, the Chief Justice of the Cayman Islands delivered a landmark ruling, a judgment running more than 1,300 pages that stunned bankers worldwide. The court found that the Al-Ghosaibi family had deliberately misled the world. This was not, the judge said, a simple case of theft, but a large-scale fraud on both sides. The court rejected the family's claim of ignorance outright, and also found that the international banks bore significant responsibility for the losses, having handed out billions of dollars based on nothing more than a trusted name without proper scrutiny. The ruling delivered a harsh lesson to the global banking system. But the story doesn't end there, because the real question remaining was, what happened to the man at the center of it all, Maan Al-Sanea? For years, Al-Sanea continued to live comfortably in Saudi Arabia, denying every allegation against him. But in 2017, the Saudi government launched a sweeping anti-corruption campaign. One day, without warning, police surrounded his palatial residence. Al-Sanea was arrested, and all of his bank accounts were frozen. He was accused of defrauding both his own country and banks around the world. The Saudi government ordered his assets auctioned off to help repay the banks. Hundreds of his cars, vast tracts of land, and countless valuables were sold for billions. The man once ranked among the richest people on earth watched his entire empire reduced to nothing. The proceeds from the auction were returned to the banks that had lost money in the fraud, but it was a fraction of the $9.2 billion owed, and most banks were forced to write off their losses for good. The collapse of AHAB and Saad Group is still remembered as one of the darkest chapters in modern finance, an event that permanently reshaped banking practices across the Middle East. Today, no bank extends credit simply because of a family's name or reputation. Before approving a loan, strict due diligence is required, and every document is scrutinized closely. This story is a reminder that when greed and power combine, they can hollow out even the strongest institutions from within, and that no matter how powerful someone becomes, the truth eventually comes to light.